Good morning. My name is Scott Rudler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing mixed markets around the world, with China being the standout. The Shanghai down about 1.7% as its banks reduce lending to property developers. And of course, this has been an area that's been trying to show some relative strength. In terms of our markets, our futures are up about 4 to 5 handles as we digest below key resistance. So, Scott, how do you think that we're positioned heading into today?
Well, we're not going to get that many clues from overnight because it's, again, mixed markets. You have China, which is a little bit of a standout because it started to act better in the past few weeks. So with that being down 1.7%, you might see some of the fears come back to the forefront, where I know we were talking Shibor, now they're saying that banks aren't lending to the property developers and they got crushed overnight. As far as Europe looks kind of like us, where we just had a big bounce back, digesting a little bit, in front of new highs, and then Japan, gave back a little bit, so it showed some relative strength to the Shanghai, but it's still down 9% year to date for 2014. But there seems to be at least a loaded trade against there. So all in all, it just seems like it's a lot of the same right now.
Well, so as we are digesting below some key resistance, why don't you show us those levels and the ones we should be watching?
Okay, well, if you look at the chart of the SPX right here, you will see that we did have a lot to navigate in 2014. First of all, this was that intermediate trend line, okay, with the accelerated one being broken to start the year. Then you had that line broken, and then the intermediate, which was 1770, and here was your 150-day. From here, you took an elevator down, and I like to call it the bungee cord back up, and it was fast and it was furious. It caught the shorts. Those that reduced the risk right here might have even been caught, without some of the stocks that they like. And then now you take a close look here, and the question is, what happens next? What's the next trade? Okay, if you look at it just from this standpoint, nice reversal, power, showed you potency, and now we're going sideways, just not enough power to take this out last week. So with that being said, we're up a little bit pre-market. If we stay green, need to see if we could actually power through. So resistance right here comes in around 1846, then 1847, and then 1850. So that's your zone. How we handle this zone this week is going to be very important. If we go from green to red and trade below Friday's low of 1835, then the upper important area comes in around 1824 for now.
Well, we're going to turn the spotlight on high beta tech, which is mixed, but in top headlines within the group, Netflix striking a deal with Comcast to improve speeds, but the stock is down on the news, tied to concerns about how much this will cost Netflix. But of course, this has been a very strong stock.
Yes, and there's been some talk about net neutrality. How much is it going to cost some of these, streaming content providers, for use of their networks? Space costs money, right? Anyway, it hasn't cost them anything. So now they made the deal. So it's going to be faster, more improvement as far as how they could reach their consumers of their product. But now there's a cost. So the question is, if it's out of the way now, okay, there's no more controversy or whatnot. So when I don't know exactly what this truly means to the company, I look at how the stock action shows its face or presents itself. So if you look at the chart here of Netflix, you will see this was last quarter's earnings, really nice gap. From there, you had a bull flag continuation, and it's been trending higher. This morning, it was actually down more. I think it came back already, pre-morning call. So here's the 8-day. We have not been below the 8-day since last quarter's earnings. So with that said, you also have a trend line here. So let's see how it acts. If the bears can keep it below 430 and it shows some relative weakness, maybe you break this trend and you get a test of the 21-day, or maybe even back lower. But if they can't even keep it below 430, pre-marketing goes green, there's still a huge short interest, and then there might be a nice cute or juicy trade back above 441. So it's nice and tight here. You have your levels. Watch the price action.
And Apple is also in the news for fixing a software bug and getting a downgrade from Standpoint. The stock is down a little bit pre-market on that news. What do you think it needs to do to stay relevant?
Well, first of all, Standpoint, I think, downgraded Yahoo and Amazon also on moral issues. So with that being said, you can't put too much water or too much emphasis on that downgrade. But what I will say is, you've had some nice movement here, and there's been a range in Apple. And at times it's better, at times it's an avoid. And in order for this not to be an avoid, it really needs to start holding around this area. If you look at the chart of Apple, you will see, here's the intermediate trend that it was in. Okay, here was your gap down after earnings, your little red dog reversal, news that they were buying stock, and then came all the way back to give you a topping tail into resistance. We talked about that resistance, talked about it being a spot to reduce some risk, maybe even look for a cute short. And then we could measure the move lower. And as of right now, if you want to take a real look at it, okay, we could use some Fibonacci retracements. You go to your Fibonacci retracements to the low to the high here. It's already broken the 25%. So right there, if it would have held here, you would have had a fast, furious movement to the upside. Didn't hold the 0.38, and now you're at the halfway mark where it's already getting a little wishy-washy how it's back to a range. And then the last line of defense is the 0.61, and that's also the gap. So with that being said, if you are not in Apple and you were looking for a trade, okay, this today could be the spot. Maybe we get a red dog reversal back above 524.60. I would look here, and if it goes $5, $6, $7 down today, I'm probably going to be having a frustrating day. Let's hope it can go from red to green and give us a trade, and then we get to figure out if this is a high or low, based on this pattern.
How about on the weaker side? Amazon has been weaker since earnings. Is there any opportunity here, or has this been one that you're avoiding?
No, I think that some people are starting to think we can get a continuation short move. This has been weak ever since the earnings report where they didn't give them a pass. You look here at Amazon, stock came out with earnings, gapped lower. They did not give it a pass. Then it's been trending down, and you're coming into a pretty important point. It's down a little bit pre-market. I know it's always hard to short Amazon to support, but perhaps below 344, 342 with volume, you get a move down to at least test the 200-day. This has been out of play, looking more vulnerable than stronger.
And Baidu, looking like it's been going sideways. We do have earnings coming up. What do you think about how we can figure out which direction it's going to go in?
Well, short term it broke its descending channel, and now it's trying to digest. With the Shanghai down, maybe it'll get a little pressure today. We'll see. You look at the chart here of Baidu. This was that descending channel that it broke above right at the key moving average. Now it's trying to digest. If you look at Baidu, though, you have earnings coming out, so there's going to be an event risk. So with that being said, you have big time resistance here and here. I do think they report this week. I'm not exactly sure the date. I would avoid this the next day or so. And let me get the earnings report, and we'll figure out where it is going into that report and whether or not there's some kind of option strategy or trade after hours.
All right, sounds good. All right, coming up, we're going to go in the trenches with social media. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with social media stocks, which continue to be mixed. In top headlines within the group, Facebook and its acquisition of WhatsApp. Of course, the speculation about whether they paid too much is still continuing, but as for the stock itself, Facebook still looks strong.
Yes, and on multiple time frames, it's been trading very well depending what you're looking at. And if you look at the big picture of Facebook, it's almost like the anatomy of technical analysis. You look here at the chart, and it's a beautiful picture. You're talking about, obviously this was a horrendous IPO, and then a lot of people puked it out, but this is when institutions started to probably do a little accumulation. You had your cup and handle pattern. Then finally you had your exciting earnings where they showed that they could monetize search above prior resistance. That gap was a pro gap, not even close to getting filled. And then, fast forward, here's where we are right now, all the way up here. So, when you have a mega merger at the top, some people, want to compare it to AOL and Time Warner. Some people want to do whatever they want to compare it to. For me, let's see how the market reacts here. Okay, you have another gap up in the last report. You have the 8-day moving average, which has been following since then. So, if it finally gets to close below 67.50, maybe you get some kind of corrective action. Here, you actually did get some corrective action when it closed below the 21-day, okay, with the 8-day, after that gap up was exhausted, and you had a little bit of a move lower. So let's see if that could happen again. But in order for that to happen, it's got to trade below 67.50, and if it just goes green and stays green for a day or two, there's going to be a trade here through highs, and that's 70.11.
And sticking with the strong side within social media, we have Yelp still acting well as well. What do you see here?
You know, I see a chart that had strong earnings, had a little excitement on that Yahoo news, and then it's been consolidating. So it'd be nice if it can get, can get going again. You look here at the chart. Here is, your gap up. That was to sell the news on the excitement of Yahoo. Tight flag, and I know this has been very tough. I've tried to play it a few times, and sometimes it's worked, sometimes it hasn't had any sustainability above this. So it really needs to get above, I think, 92.5, 93 with volume, and then perhaps it can get back to those old highs and continue.
How about LinkedIn? Just had that decent 2-day bounce. What level would you say it needs to hold?
Right around here. There was a nice red dog reversal, and it gave you a day 2, but then bigger resistance was the actual, pattern that was stronger. And you look here, LinkedIn's been in a trending down move since the highs here at 250. You did have some kind of red dog reversal right here, gave you a day 2 right above there, but what happened was bigger resistance came into play, and that's why you have to know what your time frame is here. So with that being said, you look real quickly, it's still above this area, so for this to stay in the game for maybe a move into these moving averages, I'd say it's got to hold above 190. Look at it today, see how it reacts, and if it starts to get going again, perhaps there's another trade for continuation from here, and that's got to be above this 199, and then look at the congestion here between 202 to 220. It's just, there's a lot of resistance here, so I would either just take small trades or avoid.
And Zynga showing some recent strength as well. What do you think is the level that Zynga needs to hold?
I think they brought it back to $5 for option X. There was a lot of options there, so then the dealers could make more money, I think, when it closes at 5, because all the calls go worthless, all the puts go worthless. So if you look at the chart of Zynga, I'm still in it, and you can see my disclosures at the bottom of every article that we post with the morning call. Big gap up, nice little wedge, continued further, flagging again. If it starts getting above 508 to 516, it can continue. You go to your weekly chart here. On the weekly chart, it looks like you could see $6, maybe $8. Big time lower consolidation. Keep it in the drawer. I think it's somewhat exciting.
All right, let's do some quick hits here. Let's check in on Tesla following its solid report. What do you think of Tesla here?
I think that, after hours it traded through 206, gave you a quick move to 222, and then became a little bit noisy. So with that being said, after earnings, sometimes a strong stock needs time to consolidate. If you look at the chart here, you will see this was your prior high. This was your 206. You now have 2 red days to consolidate that. The 8 days catching up. So I would say it's still constructive if you want to trade versus something. If you want, and you're long and you're a little worried, just stay long. But if it were to close below 206, then maybe we get some kind of corrective little phase. If it stays above 206, builds a nice little bull flag, your next trade for momentum will be through 215.
And BlackBerry making headlines this morning after news that Ford Sync is dropping Microsoft in favor of BlackBerry. Interesting to see what this will do for the stock. How much will this be on your radar?
It'll be on there. If it starts to stay above 965, 970, I might even add to it. You look at the chart, nice consolidation, going sideways for a while. I remember, back in January, we had a really nice trade here where it beelined all the way to 11. But from 550 to 11, it needs to consolidate. And now it's consolidating. And now some news is coming out saying that it's not really left for dead, which a lot of people made it. That's why there's a huge short interest. You look where this stock came from, it's come from a lot higher. And if you look at this pattern here, if it were to get above this first 965-ish, then you have the 200-day 1003. And then, if it were to clear this big resistance, who knows? Maybe one day this year, $13 to $14. So see if it continues to trend higher. Next level is around 1003 right over there.
All right, and lastly, we have the metals up again today. Clearly, it's been a different story for 2014 for gold, clearly a more consistent one. What do you think about gold here?
Right, in 2013, every time it looked good, it failed. This time, every time it looked good, if you put some kind of strategy together, you've been a little rewarded from the long side. So you look here at the GLDs. I got involved right around here and caught a nice little trade and haven't really looked at it since. Some people are staying with it as long as it stays above the 8-day, which makes sense. That's what it's been doing for 2014. It's up this morning. You have a high here of 128. I'd say as long as it stays above 128, the 200 days right there. And, perhaps I think last Tuesday I went on CNBC and talked about it a little bit, and I said perhaps it could make a move back to, this would be about 1400 to 1440. And if you go to the weekly chart, it's a nice little snapback, you know, from where it was here, where it was there, where it broke this macro support right here. So you're talking about a little bit of a retracement action, which if you get in it from the right spot, it could be a profitable trade. So there is still some room. You might not want to buy it, just don't have short on the brain.
All right, gold bugs like to hear that. How about heading into the trading session and a new trading week? What will we be focusing on?
Well, I just want to see if we continue to consolidate, or we potentially could break above 1850. In order to break above 1850, I think the banks will have to start acting better. You'll have to see some more participation in overall tech. You know, at this point, bios have been strong and technologies at highs, but you know the S&Ps can't do it yet. So with that said, you know what's been working a little bit more is if you have a winning long, not adding to it. The same way if you just made money short, not pressing it. So what does that tell you? That tells you to take trades, and that's if you're very active. If you're a little bit longer term, you know what? We're about 1% off the highs after a 30% move last year on top of a bigger 2-year move. I think you don't have that much to worry about, even though all the headlines want to tell you that, you know, the next big move is down, not up.
All right, and with that said, happy trading, everybody. Have a great day.